With the introduction of auto-enrolment, more and more people are now paying into a pension and saving for retirement, which is overwhelmingly a positive thing. The vast majority of those who do pay into a pension will benefit from something called tax relief, which we'll look at in this video. Now, before you go to sleep, this is an extremely important topic and can turbocharge your retirement. Hello and welcome to the channel. My name's Alex and I'm an independent financial advisor. In this video, we're going to look at what tax relief is and how you can get it. We'll focus on the most common method, which is known as relief at source, which most of you will be on. I'll also touch on the other way, which is known as a net pay arrangement towards the end of the video. One of the biggest advantages of saving into a pension is that your contributions can benefit from tax relief. This is given in the form of a contribution. It's to encourage you to save for retirement effectively. This means your pension provider will automatically add the tax relief to your contribution, and it's essentially free money. Tax relief is granted at the highest rate of income tax that you pay. So if you're a basic rate taxpayer, this means you'll get 20% tax relief. If, on the other hand, you're a high rate taxpayer or additional rate taxpayer, well, it gets even better. Tax relief will be paid at 40 and 45% respectively. For basic rate taxpayers, for every pound that you put in, this becomes £1.25. In other words, it's like having a 25% boost to every contribution. So if you put in £100 to your pension, with tax relief, the contribution will become £125. This is one of the biggest reasons why I believe, at least, pensions are one of the best investment and saving vehicles. When you use larger numbers, you can see how powerful this becomes. For example, if a basic rate taxpayer made a net pension contribution of 10k, this will be grossed up to 12,500, meaning you get £2,500 tax relief or free money. How about if you're a high earner? Well, it gets even better. If you're a high rate taxpayer, you'll get 40% tax relief. 20% will be added to your contribution automatically. You can claim the remaining 20% back on your tax return. You can see on the graph on the screen what the overall cost is of making a £100 pension contribution. So for a high rate taxpayer looking to make a gross £100 pension contribution, this means it would only cost you 60 quid. High rate tax relief, now it's quite a contentious issue, with many think tanks arguing it's unfair that higher earners get more tax relief than lower earners and that a flat rate of tax relief across the board would be fairer. When the budget's announced each year, there's lots of speculation that this could be something that could be scrapped, although so far successive chancellors have rejected this. You could argue if you are a high rate or additional rate taxpayer, then it's perhaps a good idea to maximise your pension contribution for this reason in case it is withdrawn. If you are enjoying the video and you've found it useful so far, please don't forget to like and subscribe, as it really does help me out. Tax relief is only given if you meet the following criteria. You're under age 75, you're a UK resident, and it's awarded up to your annual allowance, which is the lower of £60,000 or your relevant earnings. For a more detailed explanation of how to calculate your annual allowance and other things to be aware of, have a look at my previous video. It's very important to think about your contribution in net and gross terms. A gross pension contribution is basically after tax relief is added. So if Tom was a basic rate taxpayer and his salary was 30k and he wanted to maximise his annual allowance, he would need to make a £24,000 net pension contribution. To calculate the net amount, simply take the gross contribution of 30k that he wanted to make in this instance, and multiply it by 0.8. This is because tax relief is awarded on the total gross contribution. Importantly, if you have no relevant earnings or you're retired, it's still possible to make a pension contribution and benefit from this all-important tax relief. You can make a pension contribution of £2,880 and it'll be grossed up to £3,600. This is effectively £720 free money, which we find is so often overlooked. You may be thinking, that all sounds well and good, Alex, getting the tax relief on the one hand, but if I'm going to pay tax on my pensions anyway, what's the point? And isn't the situation a bit of a stalemate? I'll get the tax relief on the way in, but on the way out, I'll eventually pay tax of 20% or more on my pension withdrawals when I retire. Now, although this is true to some extent at least, not all of your pension is taxable, as typically 25% of your pension is tax-free, while the remaining 75% will be classed as taxable income. This is known as your crystallised fund. Even if you take taxable income from your pension, you can make use of your personal allowance, in which your income is taxed at 0%. We often see this with those who retire before they receive their state pension and have no other income. By using a combination of tax-free cash from your pension and taxable withdrawals up to your personal allowance, with prudent planning, you can effectively ensure your withdrawals are tax-free or as low as possible. We have focused on the most common way tax relief is paid, which is known as the relief at source method. We'll now look at the other method, which is known as a net pay arrangement. Many occupational schemes, such as final salary or defined benefit pensions, pay tax relief this way, and a smaller amount of defined contribution pensions do, such as master trusts. So if you're in a net pay arrangement, then your pension contributions are effectively deducted from your salary, and so no income tax is paid on the contribution. This means you get the tax relief back immediately at the highest rate of income tax that you pay. So if you're a high rate taxpayer above, this means you don't have to claim the high rate tax relief back on your tax return, which is better from an administrative point of view at least. However, this is the big downside. If you're a non-taxpayer and you earn below the personal allowance, this means you won't get any tax relief. This is one of the reasons why a net pay arrangement can be seen as so unfair for lower earners. If you were in a relief at source scheme, it wouldn't even matter, as you'd still get the tax relief. If you've enjoyed the video, don't forget to like and subscribe. And if you have any questions on tax relief or how to get it or claim it, let me know in the comments below.